Good afternoon and welcome to CanadianAgMarkets.com. My name is Brian Como. Today is the 18th of September. We've been doing these videos now for a little over 6 months, or maybe for about 6 months. We'd love to know how you think we're doing. If you're a regular watcher of this video, or maybe even this is the first video that you're watching, put a comment about what you think about our channel in the comments below. We'd love to hear your feedback, what we can do better, what we can do different, all that kind of stuff. So don't be shy. Put some comments in the comment section because we'd love to hear from you. Let's get into what happened in markets today. We saw canola do a U-turn today, finishing off $4.20 lower at 623.90. We also saw the wheat complex lower today, 2.25 cents lower in Minneapolis at 5.73 1/4. Kansas shed 6.25 cents today at 5.16, and Chicago shed 4 cents at 5.28 1/4. Soybeans did decline about 6.25 cents at 10.4375. Corn was down 3 cents at 4.26 1/2. Soybean oil was down 65 points at 51.83 a pound. The Canadian dollar slipped 12 points to 72.48. Cattle was up today. We saw live cattle up a $1.27 to 231.85, and feeder cattle up a $1.15 at 356.32. All right, let's get into what canola looked like today, because it was a bit of an interesting day. As you can see, we are testing some. I got ahead of myself there. Testing some support here. There's a little kind of uptrend that's happening here, and we did test the bottom end of that uptrend. As you can see, this market has been trading inside of this channel quite aggressively. It's been trading below the 20-day moving average quite a lot as well. So we did kind of see this similar to some of these other areas here where canola kind of moved above the 20-day moving average and then started to fail. That could mean that we are in for another move downward towards that $600 area. As you can see, we have some longer term support in that area as well. Plus, there's always psychological technical support there down near even numbers. The bottom of the channel is also there at this point in time. So at this point, it looks like we're still following that channel. I had some hope over the last couple of days as it moved above the 20-day moving average that we might even move further towards the top of the channel. But canola's not cooperating very well. It did do an interesting U-turn today at about 10:30 a.m. Central Standard Time. So it never really recovered from that. I think a lot of that has to do. So here's 10:30 about in the morning here on this is the November canola 5-minute chart. We had a very similar thing happen here in the soybean oil pit, sorry. Here's that same time frame for soybean oil, and then we saw declines as we moved throughout the day. I do believe this had a lot to do with what pressured canola today late. We're obviously also continuing to see harvest pressure in canola, and I know a lot of the crushers and elevators are promoting more November forward, as September and October are getting relatively full, or at least lots of pressure in those markets where the better basis is further out. Now, of course, there's always carry to go further out as well. So if you don't need to sell in the fall timeframe, or even in the rest of the 2025 calendar year, you're likely to get better prices going forward. But keeping on the soybean oil train here for a second, we now have a couple of down days here in soybean oil. That doesn't necessarily spell a huge amount of danger. Obviously, it's more range bound here looking than anything else. But that could mean that we come back and test some of this resist or the support here at around 50 cents a pound. That would continue to put pressure on canola as well. It would also continue to put pressure on soybeans. But overall, that's the story. I think soybean oil is range bound at this point. We see some gains. As positive biofuel mandate information comes out, and some losses when it looks a little bit more dire. The one thing that is a little bit concerning here, though, is we are kind of seeing these lower highs, as you can see here, and lower lows. So that might signal that we're in a bit of a downtrending market. It's not as aggressive as some of the other downtrending markets, but some to keep an eye on going forward as well. One thing that did perform well today was Euronext rapeseed. It's kind of been pushing higher here. It's now back above that 745 area, testing resistance at 748, which is the 100-day moving average. One thing I'll say about Euronext rapeseed, I think that there's because China has put the tariffs onto Canadian canola seed. And that means that China is having to source from elsewhere. There is no canola futures market traded in Australia, which is, I think, where they're buying a lot of it. But I think anything that gets purchased from Australia then is no longer available to Europe. And I think this is helping add some strength to the European or Euronext rapeseed market. So we have seen some gains in that regard in the last couple of weeks here. I did put for those of you who are premium subscribers to our content. I did put a bit of a rant in our morning commentary today about the canola and Chinese EV car situation. My rant, of course, was that I'm in support of open markets, and I think that tariffs should be released. And I'm not a big fan of tariffs in order to get what you want in the trade from the trade market. I do think it's important to protect certain industries. I could see some support, for the dairy, for the eggs, things like that. But cars, I'm sorry, and maybe this is because I'm not from Ontario. I don't necessarily feel that we need to prop up our automotive industry. I think that they should stand on their 2 feet and let the chips fall where they may as far as the market goes. And it sounds like this headline was just placed after I put that rant. Is that a poll suggests that most Canadians actually favor cutting EV tariff for canola relief. So I'm on board with that. I think you guys are probably on board with that. Not that I want to run out and buy a Chinese EV, but apparently they're good quality and they're cheaper. So I think they should be allowed at least to compete. And if that helps our own industry, our own automotive industry, raise their standards, get better quality vehicles, that might help us out in the long term. So that's my rant. Anyway, in a nutshell, I think I went into it longer in the commentary I put out this morning, but that's that. Here's the soybean chart again. We saw a couple of days of weakness, similar to the soybean oil market. This seems very range bound. Continues to seem range bound. We got 10 kind of 60 up here on the top end, and 10 and a quarter kind of down here on the bottom end. It's probably continue to jostle back and forth through there. If we see a move or a breakout below one of those areas, that's where I would start to get really interested in either way or the other. There is harvest pressure to come into this market yet, particularly from the U.S. So we could see some further weakness as the harvest pressure comes in, unless, of course, we're seeing lower yields than expected. Wheat market wasn't so healthy today, as we noted before. This is the hardwood winter one, which was hit the hardest, 6.25 cents down, I think, today on the hardwood winter market. It is kind of pushing us back towards these previous lows here, down around $5. It's just going to be a grind in this wheat market, I think, and not a lot of losses in the Minneapolis pit, maybe a little bit more in the Chicago. They're all kind of in this sideways trending thing at the moment after seeing a significant amount of weakness through the summer. So I think we're just going to have to continue to grind out this wheat market. I think elevators are competing in the Western Canadian marketplace with, using basis in order to try to incentivize some sales. So there is some positives there. And I think that the one thing that's positive about that is because you can go back into the market with options or with, broker futures contracts, things like that, in order to try to enhance your futures component of your price right away. But the basis specials and things that are coming out now help you kind of get that cash price up to a point where it's not nearly as bad, or at least a little less worse, maybe is the right term. And then you can manage the other risks accordingly. Managing basis risk, of course, is very difficult. So it's much easier to manage the futures component of that than it is to manage the basis component of that. I did want to end on a high note today because there is a bull market, and we talked about this as well. We saw the equity markets continue to rise in this environment. We saw some rate cuts and some yesterday from the Fed, and stock markets love lower interest rates. So we're seeing some continued gains here. There was some signal that the interest rates could even get lower before the end of the calendar year. I think the market is liking that. So if you do have some money invested into the stock market, hey, at least you got something that's going up today. That's all we have for you today. Thank you for joining us. We will see you again tomorrow.